What if you could earn monthly income without dealing with leaky faucets, late rent, or property taxes? That is exactly what REITs, real estate investment trusts, allow you to do. And in this video, we're walking through 10 of the best Canadian REITs to buy and hold in 2025. These are high-quality companies backed by real assets, real cash flow, and strong tenants. Plus, most of them pay monthly, and a few offer some surprisingly generous yields. Let's get into it. First up, we have Granite, ticker symbol GRT.UN, one of the most reliable names in Canadian industrial real estate. They own large-scale warehouses and logistic facilities leased out to names like Amazon, Magna, and Wayfair. These properties are spread across Canada, the US, and Europe, with a portfolio occupancy rate near 99%. Granite also has one of the cleanest balance sheets among Canadian REITs, and it pays a steady monthly dividend with a yield of around 4.75%. Not the highest, but one of the safest. If you want a dependable cash flow backed by industrial giants, Granite is a rock-solid choice. Next is CAP.REIT, or CAR.UN, Canada's largest residential REIT. They manage over 44,000 rental units, including apartments, townhomes, and manufactured housing. Their properties are concentrated in markets like Ontario and BC, where demand for rentals continue to outpace the supply. CAP.REIT has a strong track record of maintaining high occupancy and growing rent, even during tough economic periods. It pays a monthly dividend that currently yields about 3.43%, modest, but backed by reliable residential income. If you want exposure to Canada's housing shortage without owning a physical property, CAP.REIT is a great way to go. Now let's talk about Allied Properties REIT, trading under AP.UN, an office and tech-focused REIT with a twist. They focus on urban tech campuses and data infrastructure, mostly in downtown Toronto, Montreal, and Vancouver. Their tenants are creative, tech-oriented firms, and they're also expanding into urban data centers, which is their long-term growth angle. Because the space is still recovering, Allied trades at a discount, but here's the upside. It currently pays a monthly dividend with a very attractive yield of about 9.9%. This one carries a bit more risk, but for yield hunters who like a recovery story, Allied is worth a deeper look. At number 4, we have First Capital REIT, or FCR.UN, a retail REIT doing things differently. They focus on grocery-anchored shopping centers in dense urban neighborhoods. Think of plazas anchored by Loblaws, Shoppers, and Starbucks, places people go to every week, not just for occasional trips. Their properties are well located and built for long-term demand. First Capital pays a quarterly dividend, and it currently yields around 4.87%. It is a steady performer with inflation-resistant rent streams, great for investors who like essential retail. Next up is Choice Properties REIT, ticker CHP.UN, a diversified name with a rock-solid anchor tenant. Their portfolio includes retail, industrial, and residential properties, but the standout is Loblaw, one of Canada's biggest companies, which provides over half their rental income. Choice pays a monthly dividend, and the current yield sits around 5.22%. It is a well-balanced REIT that offers both income now and growth through development in the future. Here's the one that flies under the radar, Canadian Net REIT, symbol NET.UN. They specialize in triple net leases, meaning tenants cover taxes, insurance, and maintenance, while the REIT collects predictable rent. Their tenants include gas stations, fast food chains, and pharmacies, all essential with long-term contracts. It currently pays a monthly dividend with a yield of around 6.31%, making it one of the highest income options on the list. If you like simple, predictable income, Canadian Net is definitely worth a look. Now we have SmartCentres REIT, traded under SRU.UN, best known for its partnership with Walmart. They own Walmart-anchored shopping centers across the country, giving them one of the most dependable tenant base in the industry. But SmartCentres is evolving. They're expanding into residential development with their Smart Living brand. It currently pays a monthly dividend with a strong yield of around 7.2%. For income investors who want both retail strength and residential upside, this one is a compelling combo. Next is Dream Industrial REIT, or DIR.UN, a globally diversified industrial REIT with serious momentum. They own warehouses and logistics centers across Canada, the US, and Europe, and they're still expanding smartly into new markets. Tenants include manufacturing, shipping, and e-commerce players. Dream pays a monthly dividend, yielding around 5.95%. If you want international exposure without venturing outside the TSX, Dream delivers both income and growth. Now let's take a look at InterRent REIT, ticker IIP.UN, a smaller player with a big value add strategy. They buy older rental buildings, renovate them, and then boost rents and property value. It is a smart model focused mostly on Ontario and Quebec. InterRent runs a tight ship with low debt and high reinvestment. Its dividend yield is smaller, about 2.79% paid monthly, but the focus here is long-term appreciation, ideal for investors who are playing for the long game. Our final pick is CT REIT, trading under CRT.UN, a rock-solid retail REIT backed by one of Canada's most iconic companies, Canadian Tire. They own and manage over 370 retail properties, almost all leased to Canadian Tire or its subsidiaries. These leases are long-term and come with built-in rent increases, which means predictable growing income over time. CT REIT maintains a conservative payout ratio, and the portfolio is incredibly stable. The current yield is about 6% paid monthly. If you want income from a REIT that is built on dependable Canadian retail real estate, CT REIT is one of the safest choices out there. So there you have it, 10 of the best Canadian REITs to buy and hold in 2025. Some offer high monthly income, others bring long-term upside, but all of them are backed by real property, smart management, and stable tenants. If growth investing is your thing, check out my video on top 15 Canadian growth stock. I will link it right here on the screen and in the pinned comment below. Thanks for watching, and I'll see you in the next one.